Well, good morning. It's September 11th. Want to bring with you the latest data here in the Austin metro area. I'm going to start with some national news today. This is the Case-Shiller Index. Think of it as kind of an S&P 500 for real estate, but essentially they're tracking 20 of the largest U.S. cities, and this is kind of their index showing you the pace of appreciation. So the bottom of this chart is 0% appreciation. So basically, if we go all the way back to 2013, which had a little spike there, this is all appreciation. Even though it slowed in 2019 and early 2020, it's still appreciating. And then, of course, you see the rocket ship ride that we had during the pandemic and this huge drop now that interest rates have climbed. But we are still hovering right around flat to barely negative. And this is on a national level in those top 20 cities. The month over month average, you can see it decelerating here. Again, this is national. And then when I come down to those cities, you always hear that real estate is local. This shows you why. So these are the actual 20 cities here. 13 of the 20 metros saw some acceleration or some price increases from last year, with the highlights being Chicago, Cleveland, Miami, New York, Charlotte, Atlanta, Detroit. Those are the ones that have seen kind of an uptick. Even though we have high interest rates, those could have been cities where maybe people were fleeing from during the pandemic and they're now coming back. You have some in the middle, and then these are the ones that are decelerating. LA, Dallas, San Diego, Denver, Portland, Phoenix, Las Vegas, San Francisco, Seattle at the bottom of the chart. So those are the cities that, even though they've had a nice run up, they're decelerating. It doesn't necessarily mean that they're actually going negative on price, depending on how much they were accelerating the year before. But it just means they are decelerating those markets right there, which I found is interesting. Let's take a quick look at mortgage rates. Right now, we're still sitting around 7.25% for the 30-year fixed rate. We've been at or above 7% since late July. And we're really seeing that show up in the data. Also, it's kind of hitting as we've had the second half of the year, kind of seasonality, at least here in the Austin market. We tend to see a summer slump. We tend to see the fall pick up a little bit with buyer activity. And then, of course, it drops off as you head into the winter. So we're seeing that on mortgage rates. Here's a couple charts I want to leave you with. This is number of active versus sold listings. I shared this last week. So green is the number of active single family homes for sale on a given month. And the blue is how many of those closed on that month. And so you can kind of see, obviously, this is last fall. We had a huge rise in inventory because we raised interest rates last year. We had a huge spike in inventory. Nothing was moving. A lot of sellers brought their homes off the market. And also a few things were selling. But ultimately, you kind of had your winter slump. We got to about February is the low point. Then you have the spring buildup, very seasonal. You have these kind of ups and downs. But what's happened since the spring is we've really not dropped our inventory down any. And the reason is the sales have slowed down. And so we haven't really had a higher level of late summer sales. And that allowed the inventory to kind of stay up. And so we haven't seen yet this part over here, this downward trend that we normally see. Hopefully later in the fall, this means either sellers are selling their homes. That's ideal. Or taking their homes off the market, wait for next year. We haven't seen that yet, so we're starting to see inventory just kind of plateau right now, sitting around just under 11,000 single-family homes for sale. This one is days on market, cumulative days on market. So this is looking at how long does it take to sell a property. So last year, obviously, it was building up because we had a lot of inventory and you didn't have a lot of buyers. And so what happened is these are the same homes. They were just sitting on the market, building up. We almost got to 80 months. 79 in March of this spring. But then, of course, the spring happens. You have more buyers come out. It lowers those days on market. And now we're seeing them start to build up again. We're kind of sitting about where we were maybe December last year. We're seeing months of inventory build back up. So is it going to go all the way up to here? We'll have to see. But we're just seeing it. It just takes a little longer. 67 days, call it 2 months. That's pretty average right now for a home to sell in Austin. So it all depends on where you start on price, who's in your neighborhood, what are you competing against, how quality is the product that you're selling. So there's a lot that goes into these numbers, but on a high level, you can kind of see how the market is trending. This is a little shorter video this week, but wanted to share with you those highlights. If you want to take a look at some deeper data or a bigger picture, look at the video from last week if you missed it. We covered a lot of data that covers 5-year trends as well. Hope you find that interesting. Obviously, take a look at all of our videos on YouTube. You can find them at Ryan Kelly Group on YouTube. We post these videos weekly. Until then, I hope you enjoy a great week and look forward to talking with you next week. Thanks.